Hello and welcome everybody to the Gold and Silver Club, presenting the Commodities Corner by myself, Phil Carr. So today, during the session, guys, we will be covering live market analysis. We will go over a watch list of trading opportunities. We'll provide a forecast of where we expect commodities to head during the US session today as we head into next week as well. How we expect the markets to move. We'll, of course, be answering questions and, as always, providing live support. So any questions, any comments at all, do put those into the chat function and we will go through those during the course of today's session. So before we get started, let me introduce you to the Gold and Silver Club. So the Gold and Silver Club is regarded as the go-to authority on commodities, the #1 commodities trading and investment coaching company. As internationally respected experts, our analysis and our opinions on the metals, the energies and the agricultural markets, they are routinely sought by major financial television channels and publications which include Bloomberg, Reuters, CNBC, the Financial Times, Wall Street Journal. Our team of experts has trained and mentored over 100,000 private traders from all over the world to increase their wealth and generate substantial income through commodities using our exclusive research-driven strategies. So for more information on the Gold and Silver Club and our expertise, please visit our website, which is at www.thegollandsilverclub.com. Okay, good. So we will get right into it, and I want to just put some major dates in your diaries at the moment because we do have some big trading opportunities which are going to be coming up over the rest of September here, and also as we transition into the final quarter of the year as well. So the first being the FOMC, the policy meeting, and also the statement as well. So the FOMC statement, which is expected to be a major market mover, is going to be next Wednesday. So next Wednesday, the 21st of September. Have that in your diary, guys. I'm sure a lot of you are aware of that already, but if you're not, 7 p.m. next Wednesday is a big market mover. Out of all the Federal Reserve statements which occurred throughout the week, throughout the year, that is one of the most high impact news items of the entire year for the Federal Reserve. Okay, so do make sure you've got that in the diary. We expect some explosive moves on the US dollar, on gold, silver, platinum, palladium, oil as well. We should get some big moves on that. Now, the following week, we have the OPEC meeting. And now the OPEC meeting is also a catalyst for big price moves, but you want to look more closely at oil for that, okay? So you want to have your focus on light sweet crude oil or Brent crude oil, and that is going to be on September the 26th is the start of that meeting, which goes right the way through to Wednesday the 28th. And we are expecting some good trade opportunities on oil at that point in time. And then September the 26th, right into the last week of the month, is going to be the start of the US presidential debate. And that will start to provide more volatility again for the financial markets, particularly stock markets, the US dollar index, and that will definitely start to cause some further moves for commodities, which can provide more lucrative opportunities. And then, of course, we actually have the results of the elections, which will be at the beginning of November. Okay, so with that, I hope you've had a chance to just write those down, put those in the diary, and I'll go through those as they relate to the technicals very shortly as well. Essentially, today we will be looking at two different types of trades. So we are going to look, and these are very straightforward way to trade the markets when you're using binary.com. We look at higher and lower trade. So very simply, if you're new to binary, a lot of you are experienced already, but and it'll be a bit of a reminder for you, but if you're new to binary and you haven't come across this way of trading before, very simply, all you need to do in this way of trading is we are looking at a higher or lower trade, and this is where we execute a position, and then we are expecting, if we go for the price to be higher, what we want to see is the price close 1 point above our entry price in order to win the entire payout. So what we need to get right is the entry, then we of course need to time our exit price appropriately and also get the direction correct as well. So for a lower trade, you would be looking for the price to break down. So you would be taking advantage of momentum to the downside. You want to time your entry correctly, get the time frame right, whether you want to do that over 1 hour, over 1 day, over a week, but you want to make sure that you put all of that criteria into the trade. And then if the price closes lower than your entry price over the given duration, you win the entire payout. Now, the beauty of this type of trading is it's great for volatility. It's good for news trading, and you don't need to put a stop loss in the market or a take profit. So you can take advantage of smaller moves in the market, and you only need the price to close 1 point in your direction to win the entire payout. At the same time, if markets are very volatile, if you've got a lot of volatility, and normally having to put a stop loss in on that particular trade, which would require a very large risk to ride out potential volatility, utilizing binary.com does allow you, utilizing these sort of trades does allow you not to need to have a huge stop loss in the market. So that is the real benefit of using this. It's a great tool for your trader toolbox to have alongside however you're trading at the moment. Okay, so with that, we'll go over to the charts. As always, guys, keep the questions coming. Good to see you, Jermaine, as well, and special hi there to Barbara as well. Great to see you too. And with that, guys, we'll move over to the technicals and we'll start going through any additional questions as well. We will certainly cover those too. And yeah, just a welcome to everybody else on today's session as well. So Nirmal, good to see you as well. Great stuff. Hey there, Paul, Nang, and Aries, great to see you. Sri, Asminario, Nuyik, Fatima, Donny, Tutum, Nyor, Lloyd. Excellent, great stuff. Hi there, Jack, fantastic. Bruce. Okay, perfect. So guys, as always, if there's any questions, do put those into the chat during the session and we can cover those as we go through each of the markets. So gold and silver in particular looking very interesting at the moment. So what I will do, I'll bring you over to my charts. We'll do a bit of analysis on those. Yeah, great stuff, Lloyd. Hi there. Fantastic. Okay, good. So let me just share my screen with you so you can see that. Okay, should be on my silver chart at the moment. Just do a quick check-in, guys. You can see that okay. Yeah, fantastic. Thanks, Sharice. Okay, good. Right, so we'll start off with silver here. And silver right now has been quite interesting. So over the whole week, it has just continued to consolidate, creating higher lows and lower highs as well. So you've got this pennant formation on the chart where it's been consolidating all week. And this is actually very typical before you go into a major news item such as an FOMC statement, which is, of course, what we have next Wednesday. So what I would point out to you at the moment on silver is that we have had some significant gains over 2016. Silver is up still over 40% so far this year. It is one of the best performing commodities so far in 2016. It is definitely come back. The recent corrective pullback has brought silver back into an attractive buy zone here where it's sitting just below $19 per ounce at the moment. And you can see we've got a nice channel here which goes all the way back to May, and we've found support at the lower end of that channel more recently over August and now into September as well. Now, the last time we revisited the lower end of this channel was going back to non-farm payrolls at the beginning of September, where we saw a significant breakout to the upside following on from that. So the non-farm payrolls came in, they were below expectations, they missed expectations, and with that, the US dollar broke down, and silver had a decent breakout to the upside. In fact, over 170-point move here from the lower end of the trend channel. So where you get these major news items such as non-farm payrolls, Brexit that we've had this year, FOMC statements, a lot of those have gone favor in the predominant trend for the precious metals. Now, at the moment, we're sitting around a major trend channel. We have seen support at this level. It's really ricocheted between support and resistance. Yesterday, we saw initially the US dollar index here broke down in price, and then we've seen it retrace into the close, and it's just really consolidating as well. So the US dollar index typically moves inversely to gold and silver, and you can see at the moment it's had a bit of a rise during the earlier part of today's session. We had a mixture of data coming out yesterday which was initially bearish for the US dollar index, but it did find support into the close, and it's really just consolidating, which is what you'll probably find on a lot of markets now ahead of next week's FOMC statement. So right now, silver is holding on to an underlying trend channel, and you can see it's just finding a little bit of support at the moment. What I'm looking for confirmation here, and we could break it down. Let's have a look just on some tighter time frames here. Not really too much down the 1 hour. Yeah, the 4 hour, nice. You've got a nice supported channel here as well. We're really getting tight. So the tighter we get in that pennant, we're looking for a breakout. It could happen today, it might happen next week, but ultimately here, I would be interested. Certainly, I think if we were to get a break to the upside here, that would be an ideal scenario at the moment, particularly breaking above the weekly highs here, breaking above. We've got some key levels overhead, about the 1930 zone could give us a nice lift to the upside in the short term here if we were to get a breakout above that zone. We're really tight. The range on silver is pretty tight at the moment. And if we were to break down here, we've got underlying support right now in silver at the 1866 level, and below that is a lot of underlying support as well at the 1850 zone. So there's a lot of support here for the silver market right now, where I would expect it to get bid back up if we do see a pullback to that zone. In the short term, though, in terms of a new fresh setup here, I would say we can get into a breakout trade on a breach of the 1926 zone. So that's what I'm looking at the moment. It's not quite ready yet. It could confirm this afternoon. We do have some news coming out a little bit later during the US session this afternoon. Not a lot of news items, but we've got one news item in particular which could cause a move on the US dollar and potential breakout on silver. But I would hold off entering a new fresh position until silver can break above that about 1930 zone. But that's what I'm looking at the moment. If silver was to pull back and if it was to break below this trend channel which we've got at the moment, I would just watch it carefully, because often what we can see is these false breakouts, or you see these bear traps where you start to see the market break down. We saw it again yesterday on gold. We started to see price structure break down, then very quickly it got bid back up again. So just watch out for that. Predominantly at the moment, we're more interested in the buy side for silver than the sell side. It could change based on next week's FOMC statement. The results of that, we'll be watching that very carefully. So essentially right now, especially off the back of the non-farm payrolls at the beginning of September, where the data came in worse than expected, what I would look at as we go into next week's FOMC statement is we want to pay very close attention to that statement. And even if they don't go ahead with an interest rate hike for September, which at the moment is very unlikely, I think the probability of that has been reduced now to approximately 14%. What traders are looking at is to whether the Federal Reserve will indicate that they might be in a position to interest rate hikes now into December. And that's what traders are looking for. They're looking for clues as to whether the Federal Reserve will mention that. Now, remember, if we have a look at this whole year, going back to the end of last year, the Fed, they increased interest rates for the first time here, and I think it was certainly over about a 5-year period. I think it was a lot longer than that, possibly about 10 years. The interest rates which we had at the end of last year, that was then meant to be followed through by over 4 interest rates over this year. So we were supposed to see 4 interest rates at the beginning of 2016. That was what was on the table, and that is what caused gold to break down initially to 5-year lows. Silver as well broke down to 5-year lows, and then the Federal Reserve did not go ahead with any of those proposed interest rates. And each time they've not gone ahead with those interest rates, it has been a big catalyst for breakouts for gold and silver. So gold and silver this year, they transitioned into a bull market. We've seen significant upside in these markets. Silver's been up over 47%, gold has been up over 27% so far in 2016. So what you have to remember is, even if the Federal Reserve, they indicate, they hint, they suggest that they might go ahead with an interest rate hike, they don't actually need to do it. Just the suggestion of it, that they might be in a position to go ahead with a December interest rate, can have an impact on the markets. But if they have the desired impact by actually putting that out as a rumor or suggesting that they're going to do it, and if it causes a desired impact, it puts them in a position where they don't actually need to go ahead and increase interest rates, because what they actually wanted to do in terms of the impact to the markets, they have achieved without needing to actually do anything, without needing to go ahead with an increase in interest rates. So what does that mean as we head into next week? What it means is it is unlikely. It's been put down to about 14%, the probability of the Federal Reserve increasing interest rates on next week's statement. So we'll be watching that very closely, the impact of the US dollar and the potential for a breakout on gold and silver. Now, the upside for gold and silver is quite large at the moment. If we were to see, it could be a big catalyst for a major increase to the upside, but we will be watching that statement very closely. So if I move you over to gold, so just have all of that in mind right now. I'm just going to move you over to gold, because gold looks very interesting at the moment. And you have to also look at this from a contrarian point of view, because throughout this year, it has been the contrarian point of view. And what I mean by that is, when traders and analysts are getting bearish on gold and silver, they're expecting the market to break down. They're expecting a washout in the market. That is typically where you want to be buying into gold or silver. Not when it's broken out already and you're already seeing the headlines that gold's broken out to 2, 3, 4-year highs. Once you start getting into gold at those levels, so for example, Brexit, if you waited until after the Brexit move, so you wake up in the morning, after Brexit, let's say you didn't manage to get onto that trading opportunity and it was a 1,000-point move from the low to the high. And if you woke up in the morning and thought, oh, right, okay, because Brexit, most of the moves happened over the Asia Pacific session, and you wanted to get in a trade, you saw the headlines that gold had broken out to 2-year highs. You didn't want to miss the position. Getting in around these levels, once it had already broken out significantly, it didn't have much more upside here until it pulled back after it broke about above the 1350 level. That was the wrong time, really buying at the highs there. Now, each time over the course of this year, gold has been in a position where its traders have got quite bearish on it. We started to see a lot of news outlets calling for a potential larger correction in gold. We have to bear in mind that's usually the time where gold actually has a massive move to the upside. So I'll give you some examples of that. So a big example was the May non-farm payrolls, where we were expecting, this was the move that we saw prior to the May non-farm payrolls. We were breaking down significantly, and in fact, Janet Yellen from the Federal Reserve came out and said that they were on track to deliver an increase in interest rates in June. And then we saw the worst non-farm payroll numbers in 6 years, and we saw this significant surge in price, big bullish engulfing candle, big follow through, and gold went on to break to 18-month highs. Then prior to Brexit, there was again a lot of speculation that gold was going to break down significantly, that Brexit wasn't going to happen, that the UK would stay within the European Union, and with that we started to see gold correct again. A lot of traders getting on the sell side, ready for the lack of safe haven bid if the UK would stay within the European Union. And then from a contrarian point of view, yet again, the markets actually, we had a huge breakout on gold. It was one of the biggest one-day moves that we've seen in history on gold following on from that, and that was where, of course, the UK exited the European Union from Brexit, and we saw a huge breakout to the upside. And now we're back at that zone again, where gold is testing, it's back towards the lower end of this trend channel, where several major news items this year have all caused breakouts. It is looking, price structurally, we have had a bit of a retracement here, but we're still not too far away from the 2016 highs. So at the moment, sitting at 1313, we had the highs at 1,375, so we're about $60 below that level. It wouldn't take too much to get a breach above these levels. Now, what you want to watch out for as we head into next week's FOMC statement is potential volatility ahead of that. So right now, we do have some major supportive channels. 1300 to 1315 is a good support here for gold. If we can get a breach above the 1330 level, that will start boding well. And particularly, we've got a pennant formation here as well, that if we break out of that pennant, we could really start to see some good movement to the upside here. But just bear in mind that gold presents the best opportunities at contrarian points in time. What does that mean? It presents best opportunities when it looks like it's about to break down, when it looks like the overall trend is about to change, when it looks like it's about to break the 1300s. This is typically the time where gold will suddenly rocket, and if you have been on the wrong side of that trade, or you've been too cautious, or you've been too nervous to get into a position, you miss out on the entire move. Gold often doesn't really afford you the slowly opportunity to get into the market. Often it will just consolidate for long periods of time, blink one day, miss one day of trading, and you can miss a huge breakout on the market, especially if you're not around for the FOMC statement or the follow through on Thursday or Friday next week. Now, looking at the flip side of that, we do need to draw a line in the sand somewhere, where if gold was to break through major areas of support, you want to take a step back, reassess, just in case the Federal Reserve come out with a wild card next week, just in case they were to actually increase interest rates, or if they give a further confirmation that December they are in a strong position to do so. Even if they don't go ahead with it in December, if they do hint that they're in a strong position to go ahead with an interest rate in December, we could see a shakeout, in which case what you want to keep an eye on as a major line in the sand here at the moment is the 1290 to the 1285 zone, a break and a close below that level on a weekly basis. So let's say we breach below 1300, we breach below the 1290, and we got to close below the 1285 zone on a weekly time frame basis. You would want to watch out for that, because what we want to see is whether the breakouts that we got going back to the Brexit highs here, which were around the 1295 level and the 1300 level, were the major levels that got broken after Brexit. So those want to hold. We want to hold those levels if we're to see more upside on gold as we go into next week's FOMC statement. So again, if we were to see gold break and close below 1290 and 1285, then you want to be out of that position for any buys, and we could look at some potential sell shorts. But right now, gold is holding on to its very strong underlying trend channel. It's up so far 27% this year. We've seen a consolidation over the last couple of months here, but essentially we're holding on to the breakout zones from Brexit have now become support. So what you get, as I'm sure a lot of you are aware, but typically what you tend to get in the financial markets is when you've broken through a level of resistance, that level of resistance can then become support. So let me just show you exactly what I mean by that. I'm sure a lot of you know what I mean by that, but you can see often you'll have a level of resistance that the price will be struggling with, and then when it finally breaks above that level, it will often overshoot it, but then it will retest, and what it can do is retest that resistance, but now the resistance becomes support. So it doesn't actually breach below that level, and this, you can see the 1300 zone at the moment. That was resistance. We broke through that level, and now at the moment is providing support. So that is the major level I'm looking at the moment for gold. So just to go into a little bit more detail on that today, and one of the reasons for that being just because we've got an FOMC statement next week, and it is one of the major ones over this year because it is the September FOMC statement, which is usually used to drop big hints with regard to monetary policy. So with that, I just want to put that on your radar at the moment. Jermaine, good question. Okay, yeah, fantastic. Right, the zero fib level 2 below 1300. Yes, we can just draw that back on. Just hold on 1 second. Let's put those Fibonacci levels on. Yeah, you've got the 12. So the Fibonacci, just to put that, we go out to higher time frames. We can look at, let's look at a weekly chart here. And Fibonacci retracement levels. So Fibonacci levels are extremely useful when you're trading commodities. They're useful for the majority of markets, but in particular, they are well respected when trading commodities. We can have a look at that. I'll go through oil actually next to show you an example. And in terms of the 23.6 retracement level from the low of this year to the high, that sits at $1,297 at the moment. So that is quite a major underlying level of support. Previous resistance turned to support. So again, that whole level around 1295 to 1300 is a major supportive zone for gold. Now you can look at that for potential buying opportunities, but just make sure to get confirmation. You don't want to catch a falling knife, okay? So if we see next week gold, if we were to get, we could essentially a pennant formation by its nature. You normally either get a breakout to the upside, significant move, or you can get a significant breakdown in price here. So what you don't want to do is catch a falling knife on gold. If it was to start breaking down in price following on the FOMC statement, you just want to be careful. As always, manage your risk appropriately, which I'm sure all of you will be doing, but you just want to make sure that if it was to break down, you don't catch a falling knife on that by trying to buy if it significantly breaks support. But the 1300 level is a very clear line in the sand down to the 1285. So 1285 to 1300 is a major supportive channel. Now let me move it on to oil. One of the reasons we want to have a look at oil as well is because we're continuing to consolidate ahead of the OPEC meeting, which is occurring at the end of this month. But we've had some key zones. I've got a lot of channels on this chart because there's a lot going on with oil at the moment. So I can start off, let me see, maybe I can get a raw chart on here. Let's have a think what we can do for you. Yeah, I'll tell you what, just for educational purposes here, I'll just bring out a raw chart just to dig a little bit deeper and show you some analysis on oil. Okay, let's have a look. Don't want that one. Okay, hold on. We'll do that again. I'll tell you what, we'll build out a raw template. This is just, again, this will just help you in terms of a bit of, for educational purposes and for the Fibonacci levels as well, just to get an idea of what we are talking about here. So hold on 1 second as I bring this out. Okay. Right, so what I will do here, so we're on light sweet crude oil at the moment. We'll just draw in some Fibonacci levels just to give you a view of the market right now. And I will show you, we can actually just put in, so we can do a couple of different levels here. Yeah, there we go. Okay, right, so what I want to point out to you at the moment is the 50% Fibonacci level here on WTI crude oil. So over the course of this year, to put this into context of what happened on oil last year. So last year on the 4th of December is when we had the OPEC meeting, okay? So on the 4th of December is where we broke down significantly in price here on oil. So we had this follow through to the downside where after the 4th of December, essentially there continued to be an oversupply in the markets. And with that, we saw a big breakdown in price for oil where it came all the way down to 12-year lows into January, double bottom into February, and then we had 5 months worth of rallies from the lows of January all the way up to the highs to the end of May here. And then we had this huge rally to the upside. Now, what you would want to do from a Fibonacci point of view is you connect your Fibonacci levels to the swing low up to the swing high, and we had an exact 50% correction of that move. So you can see where it corrected 50% before we saw another significant rally over the month of August is where we saw oil rally up 20% after it hit that 50% Fibonacci level. And at the moment, it is stuck within a tighter range. So as we go into the OPEC meeting, we are stuck in another range, and what you can draw again here is you can put your Fibonacci levels on from the recent swing low to the recent swing high, and we've essentially got key levels here sitting around. We've got a swing low at 41, we've got $40, 42, and 43 are the major levels. So these are the next major supportive zones on oil at the moment. So that's just from a raw chart perspective. Now, what I want to do now is just break it down for you, and we'll have a look at this more closely. Now, right now, oil, its major buy zones are sitting between $40 per barrel up to approximately about 44. So that is the buy zone for oil right now. It's moving between $40 to $50 per barrel over the last month. So that gives it a $10 per barrel range. And within that, it's a 1,000-point range within that. And you want to be a buyer towards the lower end of that channel and a seller towards the upper end of that channel. So what I'm looking at here, and in the short term, this morning, oil is breaking down, but it is coming back down to a trend channel and also some shorter term supportive levels as well, some Fibonacci levels. I'm going a little bit more technical than usual today, guys, just because we've got some big items coming out, news items coming out next week. And we can look a little bit deeper into this because we can start preparing for next Wednesday. And obviously after that, we can start preparing for the OPEC meeting the following week as well, which occurs from the Monday. So right now you can see the major supported zones at the moment, this underlying trend channel with oil, and I'm also looking around the 43 zone at the moment for buying opportunities at this level. If we were to continue the momentum to the downside at the moment, short-term momentum, I would look towards 40 to 41 for a potential buy opportunity. I do see a good buy zone here if we were to see oil break down further and get even more oversold between this level of 40 up to 42 at the moment. This level, which is sitting around the 200-day moving average as well, this level is a really good buy zone for oil until we go into the OPEC meeting and get past that meeting as well. So if they do agree with a production freeze, we could see oil ramp up significantly over the following weeks. But if they don't agree, if there's no agreement on that, on the flip side, we could see oil start to break down significantly. And if it was to break back below $39 per barrel, we could also get a good sell short opportunity off the back of that OPEC announcement. So in the lead up to that, we're likely to stay range bound between 40 to 50, and between 40 to 43 remains to be a good buy zone at the moment. So that's what we're waiting for. Right now, would I sell into oil at the moment? Only really short term, like within a couple of hours to take advantage of momentum. We've got the Baker Hughes report, which is coming out later today at 6 o'clock London time, which can be quite a big mover for oil. But in the short term, you're just about, if you were to sell now, you're coming right into support at the 43.40 zone. So I would avoid selling right into this major underlying supportive channel at the moment. But if we get below that zone and we get supported, there's some good opportunities to buy coming up. Yeah, Jermaine, yeah, absolutely. I do like the 61.8 as well. It looks pretty good around that zone. Definitely getting into an oversold condition at that point. Now, what you want to have a close eye on today as well is the US dollar index, because this will dictate the short-term momentum for gold and silver. If the US dollar index sells off, we'll get support for gold and silver being priced in US dollars. So we've got that inverse correlation. Whereas if the US dollar index can build up any momentum, which I think is unlikely, it's running out of steam here. We've got an overhead trend channel, the 50-day moving average, major pivot just above here as well. It's running out of a bit of steam here. If we do see the US dollar roll over today and create a lower high, lower low, start to break down, that will be supportive for gold and silver into the close. Now, moving over, actually, it's interesting, platinum is already starting to develop a bit of a rejection candle here on the daily. I'm just going to break it down and we'll have a look at platinum, palladium. Yeah, that's interesting. Okay, let me just bring that out on another chart. Yeah, palladium is actually, we've got a, so palladium and platinum tradable on binary. So what I really like about being able to trade these markets on binary is that you don't pay any spreads when you're trading platinum and palladium, which on most platforms require a larger spread. So you can get in with a good risk reward when you trade them. You don't need to pay the large spread when you're executing positions. I do quite like this consolidation that we're forming at the moment, actually, on platinum and palladium, which if we were to see this breakout to the upside, got a bit of a box formation right now on palladium. I suspect, as with gold and silver, we'll get major moves next week here, but platinum also forming a bit of a rejection candle, clear underlying support here as well at the moment. So you've got a bit of a new channel developing, and I would keep an eye on these markets because they are significantly oversold at the moment in terms of the moves that they've had over the course of 2016. They've had quite a large corrective pullback following on from August, and they could present some good buying opportunities here as we head into next week. Platinum and palladium, I'll be watching very carefully. And similar to gold in this respect, especially on platinum, often it can consolidate for long periods of time, and then within a few days it will have huge breakout trades. I mean, just to put that into perspective there, or context, we had a nice 500-point move there just at the end of July. Nice big pop to the upside. Some of the daily ranges on platinum, palladium can be within about 500 to 600 points. Palladium recently actually had a blow off top over August where it rallied 8%, over 500-point move to the upside, but it broke above its 2-year highs here. So it's reasonable to expect a corrected pullback. And again, what I would suggest that we could be forming here is very simply a bull flag formation. So you have, we've seen this quite a few times over the course of this year for platinum and palladium, and I'll show you, if you're not aware what a bull flag formation is, it's when you have a significant rally and then you consolidate and pull back, normally within a duration of about a month, only to then break back out again to the upside. We've had a number of these bull flag formations on both platinum and palladium over the course of 2016, and this is typically what you get before the next leg higher. So I can identify for you at least 4 here, okay? So one going back to February, pull back over about 3-week period, then we had another leg higher. We pulled back again over March, over approximately a 1-month period, broke out to new 2016 highs yet again. We saw another corrective pullback from May through to June. You can see this pullback, and then we broke back above the highs, and then we actually had a significant rally from June right the way through to August, and then this time we're in about the region of about a month and a half's worth of pullback. What would confirm that for the entry and a breakout would be breaking above the resistance channel here, so you would look for a break back above the 700 zone for palladium, and then that could just get going again for another bull flag formation. No market goes up in a straight line. It needs to have those pauses in the market where it pulls back, but you just want to be careful, because I've had quite a few comments recently from traders who have suggested some markets are in a downward trending channel. Is it good to look at a potential buy on that? What you need to just understand is how bull flag formations occur. So they require the market to have these moves where you want to look at the much larger trend. Okay, so just consider any market which is up over 20% is officially in a bull market, which is what gold, silver, platinum, and palladium have all entered into this year. So you just want to be aware that when you get these short-term moves where it might look like a new channel is developing, often have a look at the much larger context of that channel, and then if you see actually the overall is creating new higher swing highs, higher swing lows, this looks like actually it's a bull flag formation where it's just a short-term corrective pullback, and then it's going to break out much higher. Just bear that in mind, because although we've got downward trending channels on gold, on silver, platinum, palladium over the last month or so, they look to be just short-term pullbacks at the moment, where we could just see eventually some significant breakouts back again to above the 2016 highs. But the wild card here is next week's FOMC statement. But after that, if we do get confirmation that we're going to see some more upside here on the precious metals, there could be some really great trading opportunities off the back of that as well. Fantastic. Okay, good. So I think we've covered gold, silver, platinum, palladium, and oil, guys. So I'll just go back to those as well. Typically, we do take a trade during the Commodities Corner sessions, but as you can see today, because we've got next week's FOMC statement occurring, quite a few markets are consolidating. So I'll tell you, I'll put those on your radar right now as to what we're looking at. I would suggest keep an eye on silver here, especially if you get a breach above resistance. You could get in with an aggressive early entry at the moment around 1892, because we are finding support lower end of this trend channel, but ultimate confirmation will come from a break of the 1930 and the 1940 zone. That's what I would look at at the moment for a breakout to the upside. So that's where I would look to get into a position at instant execution there on silver. On gold at the moment, I mean, gold is really just finding nice support at the lower end of the trend channel. Again, if you wanted to go in super aggressive, you could go in with an entry long at this zone, but if you want to wait for more confirmation, I would look to next week's FOMC statement, and a breaching above the weekly highs here as well will really build up some good momentum for gold as well. Platinum and palladium starting to like the formation on those markets. If we were to close with some rejection candles here, we're getting within our oversold condition on both of those markets, so you can keep an eye on those. I quite like this palladium consolidation, this little box forming at the moment. So if we break above the higher end of that box, we could start to see momentum pick up to the upside. And oil as well, short-term momentum I do see to the downside right now. But again, as I mentioned, I've got a lot of different channels which I'm looking at here right now, and I would be looking for a buy opportunity around the zone we're in, below 44 down to 40, but I'm waiting for that confirmation, so I need a setup within that zone. I don't want to catch a falling knife when I can get a much better price on oil. So if oil wants to keep coming back down again, I'll be more interested to pick up a buy at a lower price. Now, oil is moving between $40 to $50 per barrel. If it's within your strategy to take very short-term sell opportunities, possibly if we just breach below this swing low about 43.30, you might have a short-term opportunity to take it down to around 42.50 for a short-term opportunity here. But I would be wary that the Baker Hughes announcement is coming out later today that we're starting to get within our buy zone for oil, and I'm looking to pick up a buy here, but it's not quite ready yet over the course of the US session today or as we go into next week. Okay, fantastic. So with that, I'll just bring you back to the main presentation, guys, and I'll just talk you through, we'll have a look here at, actually just go over our top trade from last week as well. So our top trade with our portfolio performance using our research-driven strategies was the breakout trade that we got following on from non-farm payroll, which went on to deliver nicely from an entry at 13.25, rallied all the way up back to the upper end of the trend channel. Before then, we've corrected over the last week or so, but that was a nice breakout trade from non-farm payrolls. And of course, if you would like access to our live trade ideas shared with you, ready to implement for instant results, you can get exclusive access to our private members live trading room just by going to www.jointhegoldandsilverclub.com, complete the application form, and we'll get in touch with you ASAP, particularly if you want to be guided through next week's FOMC statement as well. We'll be, of course, covering that with all of our members at the Gold and Silver Club ahead over the weekend and into next week's live trading rooms as well, fully preparing for next week's FOMC statement and all the trades which result from that, and then the OPEC meeting the following week, and then the presidential elections which are coming up as well. There's a lot of trade opportunities coming up, and if you don't know how to trade them or how to take advantage of the moves, do make sure you get in contact with us at www.jointhegoldandsilverclub.com. Now, I'll just break it down for you just in terms of what you get by being a member, just to make it a little bit more clear. This is what you get by being a member of the Gold and Silver Club. And who is it for? Well, whether you're a new trader and you're looking to develop a solid understanding of the markets, fast track your results, or even if you're an experienced trader and you just want to take your trading to that next level, the private members live trading room works as follows. You get access to our webinars. So private members get exclusive access to our live trading room webinars where you can watch the Gold and Silver Club expert traders analyze the commodity markets right in front of you, pick out highly profitable trade setups, share exact entry, exit, stop loss, profit targets, as well as walk you through our live trade setups to implement for instant results. You also get access to our trade notifications, so real-time notifications alerting you when to enter a trade. All of those include our exact details of where to enter, exit, stop loss. All the trade recommendations are sent out in advance notice so that you have time to get into each of the trade setups. And you get commodity research, so our market insights. So private members get exclusive access to our proprietary trading research and also our market insights to help boost your win rate and ensure you're on the right side of trades, which really helps to guarantee to give you the ultimate edge when you're trading the commodity markets. So again, everything you get by being a member of the Gold and Silver Club, you get exclusive weekly live trading room webinars, you get live trade setups ready to implement, real-time trade notifications by email, SMS so you don't miss profitable trades. You get exact details of where to enter, exit, place a stop loss. You get our weekly trading plan with a watch list of trade ideas for the week ahead, live trade support to help you through each trade, and institutional level trading research and commodity insights to give you the ultimate edge in the markets, and all of that is available at www.jointhegoldandsilverclub.com. Okay, fantastic. So I think that's it for today's session, guys. I don't think there's any more questions. Thanks for the contributions, by the way, guys. Cheers for that, Lloyd. Jermaine, some great comments there as well. Appreciated. That's great. So with that, guys, of course, I wish you a fantastic weekend. Good trading, all the best, and very much look forward to hear from those of you who will be making an application and joining us at the Gold and Silver Club. I wish you all the best, and I'll speak to you all very soon. Okay, take care, guys. Thanks. Bye-bye.